So we are doing May-June 2024, paper 42. Question number 1, which is the production budget. Okay, can you please read the question for me?
Yeah. PM PLC is a manufacturing company. Its sales budget for 2025 includes the following: April 1000 units, May 1200 units.
Okay, whatever these are the sales unit that is with us.
Yeah.
And you have to make the production budget.
Hmm.
Do you know the format of the production budget?
Yeah.
Tell me.
So you start with sales, then you have the closing inventory.
You add the closing inventory.
Yeah, you add the closing inventory. Then you subtract the opening inventory,
Yeah,
and then that'll give you the production.
that will give you the production.
Yeah.
So I usually make of all the months that is given to me. So April, May, June, July, and August. Okay. But they want for how many months?
They want only for April, May, June, and July.
They want for 4 months.
Yeah.
Okay. I start with the sales.
Hmm.
What is my sales?
Sales for April is 1000.
Okay. Keep on writing.
Yeah. April 1000, May 1200, June 1500, and July 1300.
Okay. Closing inventory. What is the policy of closing inventory?
That closing inventory, the inventory of finished goods at the end of each month should equal 20% of the expected sales in the coming month.
So this would be,
So this will be 20% of 1200.
yeah, this would be,
20% of 1500.
okay. Then 20% of 1300.
Yeah.
So it is 260.
Yeah, 260.
And 20% of 1100,
Yeah. One
220.
220.
Okay. Now
Hmm.
mine is opening inventory.
Hmm.
The closing of April would become the opening of May.
Yeah.
Similarly, closing of May would become opening of June.
Yeah.
Closing of June would become opening of July.
Yeah.
Okay. If you see over here, closing inventory is 20% of next month.
Hmm.
But opening inventory is 20% of the current month.
Yeah, so 20% of 1000 will be the opening inventory for April.
Yes. So you should be very clear. First, you do this logically. Then you see that 20% of this is the opening. So you can find the opening inventory of April, 20% of 1000, that is 200.
Yeah.
You get marks to find this opening inventory. To find this opening inventory, you get marks. Okay. You get 1 marks for this row and 1 mark for this row.
Hmm.
What is important is this opening inventory.
Yeah.
And then you make your production. So you add and minus, this is coming up to how much?
1040.
Then
Then 1 minute.
this is 1260.
Yeah, 1260.
1500 plus 260 minus 300 is 1460.
Hmm.
This is again 1260. With me?
Yep.
Okay. So production budget is done. Are you with me?
Yeah.
Okay. Now what am I supposed to make?
The cash budget.
I'm supposed to make the cash budget. Cash budget, that means, can you please read the question for me? The B part, what are they asking?
Yeah. So, prepare an extract from the cash budget. 1 second. Prepare an extract from the cash budget for each of the months, June and July 2025, to show the payments related to the production.
That means you just want an extract.
Yeah.
Okay. For which month? June and July.
Hmm.
And you have to show the payments that are related to production for June and July. Are you with me?
Yeah.
So you just want the payments for June and July and which is related to production. That means you should have your production budget handy. So I'll just copy this production budget and I'll bring it over here.
Hmm.
I don't need this information, rather I need the production budget.
Yeah.
Read the question.
Uh, Direct materials, $25. These are purchased on credit in the month of production. One fifth is paid in the month following purchase after a 5% discount. Another fifth is paid for in the month following purchase but without any discount. The remainder 60% is paid in the second month after purchase.
Okay. Now just analyze again, okay?
Hmm.
You are purchasing direct materials on credit.
Yeah.
And these materials are you're purchasing in the month of production.
Hmm.
Okay. So this is your month of production. In April, you are producing 1040. Is this
Yeah.
units? Yeah. So in April, you are producing 1040 units.
Yeah.
May you are producing
1260.
1260. In June, you are producing 1460, and in July, you are producing how many units? 1260.
1260.
You are making cash budget for the month of June and July.
Hmm.
Okay.
Yeah.
Now you have direct materials, and this is for each unit. You
Okay.
can see this.
Yeah.
Okay, fine. These are purchased on credit in the month of production.
Hmm.
So, in whichever month you are producing, you are going to purchase the materials of that unit in that month only. So, if you're producing in April, you are going to purchase the direct material in which month?
Uh, in April only.
If you're producing in May, you are going to purchase the material in which month?
May.
If you're producing in June, then
June.
July, then
July.
okay, fine. But I am looking at the payments.
Hmm.
One fifth, that is 20%, is paid for in the month following purchases after a 5% discount. When do you pay 20%?
The month following purchases. That means the next month.
In the same month, na, because you're getting 5% discount.
Oh yeah, sorry. Okay, got it. Huh.
Yeah,
Hmm.
are you sure?
Yeah.
Okay. So 20% you're paying in the same month. One fifth, that is 20%. Remaining
This was
20% you're paying in the.
not true.
When are you paying the remaining 20%? In the month following purchases, but without any discount.
So this also I think you will pay in the month only.
And the remaining 60% is paid for in the second month after purchases. I want you to think and work out what will you pay in June and what will you pay in July. Pause the video if you're watching the video. First work out and then come back. Now listen very carefully over here.
Hmm.
They are saying that whatever you purchase Whatever you produce in the same month you purchase. But the payment that you're doing 20% in the next month, getting
Yeah.
a 5% discount, 20% without getting a 5% discount, and remaining 60% later.
Hmm.
You produced in April,
Yeah.
okay? That means you're going to purchase the goods in April.
Yeah.
इसका 40% you are going to pay in May for the April production,
Yeah.
and 60% you are going to pay in June for the April production. That's why I'm writing it.
Hmm.
Are you with me? From this 40%, you are going to get a discount on the 20%.
Yeah.
Also keep that in mind. Okay. Now, what I purchase in May, okay, iska 40% I am going to pay when?
In June.
So for May production.
Yeah.
And 60% I am going to pay in July. Hmm?
July.
What I purchase in June,
Yeah.
40% I am going to pay when?
In July and 60% in August.
But I don't want August.
Yeah.
That means I want only July and August.
June and July.
Sorry, I want only June and July.
Yeah.
In June, I am going to make payment for my April purchases
Uh,
and for my May purchases.
yeah.
And in July, I am going to make payment for my May purchases,
And for April purchases.
June.
Sorry, yeah, June
I have
purchases.
written properly. I have done the sequencing.
Hmm.
Okay. Now I will calculate per unit wise. Okay.
Okay.
40% and 60%.
Hmm.
Now, whenever that 40 and 60% was there, it is clearly mentioned to us that for 20% I'm going to get 5% discount.
Okay.
Okay. Now my direct material is 25.
Hmm.
Okay. 120%, 120% and 60%. This is how it is bifurcated.
Yeah.
20% of 25 is how much?
Hmm.
5.
5.
Again, this will be 5.
Hmm.
This will be 15. Are you with me?
Yeah. Yeah.
For the 15, I'm getting no discount. Okay. Now for this 5, initial 20,
उसका 5%.
5% discount. So I'm
Zero.
going to get discount of 0.25.
Yeah.
So the final payment will be 4.75.
Hmm.
So per unit ka when I'm going to pay 40%, it would be 4.75 plus 5. That makes it 9.7.
9.75.
Are you with me?
Yeah.
So whenever there is 40% payment, I will take 9.75. And whenever there is what percent payment? 60% payment, I'm going to take how much?
15.
Sorry,
15.
I'm going to take 50. Okay, fine. Now try doing.
That's
Yeah,
it.
tell me.
Okay. So for June, I did 60% of the April production unit, so which is 1040 into 15.
60% of April
Yeah.
purchases. Yeah,
Which is 15,600, 15,600.
April purchases is 1040 into how much?
15.
Okay, so it is how much?
15,600.
Okay. And for July,
For July, I did 60% of the May
for June,
purchases.
I am getting this, na? And I will do 40% of May also, na?
Yeah, that also I've done 40% of May also.
So it is,
Yeah, so 9.75 into 1260.
yeah, so it is coming up to how much?
12285, 12,285.
12,285.
Yeah,
Okay.
so this is for June.
Yeah, and for July?
For July, I did 60% of the May purchases,
Hmm.
which is 15 into 1260,
Hmm.
which is 18,900.
Okay.
And then for the 40% of purchases, I did 40% of the June purchases, which is 9.75 into 1460.
How much?
9.75 into 1460,
Hmm.
which is equal to 14,235.
Hmm. Then?
That's it.
Okay. Now direct labor. It
Yeah.
is paid 30 per unit all in the month of purchases.
Yeah. So 30 into June and July production units.
Yeah.
Hmm.
So 30 into 1460 for June, how much is it coming up to?
1 second. 43,800.
Hmm. And for July, 30 into 1260.
37,800.
Okay. Other costs?
Uh, these are all paid in the month after production with an expectation of $4 per unit charge for depreciation. तो first तो आफ्टर प्रोडक्शन ना, सो जून का जुलाई में पे करेंगे और मई का जून में पे करेंगे.
May's production, I'm going to pay in June,
या
but I'm going to pay how much? $4 per unit charge for depreciation.
या
May I am going to pay in June
या
for 1260. I'm going to pay $36.
या
So this is going to come how much?
1 minute. 45,360.
45,360. And
या
for July, it is going to be July I'm going to pay for June.
या
60 into 36. This is going to be 52,560. Correct? So my total production payment is how much?
1 second, I'll do that.
If I'm going to add everything for June, I am going to get 117045. And if I'm going to add everything for July, I'm going to get 123495. Please check. I'll wait for you. C part, please.
The company usually makes the company usually makes its sales on cash basis for a selling price of 150 per unit. It expects to operate with a bank overdraft throughout 2025. The company has received an order from a prospective new customer who is based overseas. The order is for 900 units to be supplied in June 2025. The customer is prepared to pay 156 per unit, paying in 6 equal monthly installments starting in August 2025. Calculate the change in the expected bank overdraft at the end of each month, June and July and August. 2025 order was accepted. Assume that all the extra production would take place in the month in which units are supplied. Okay.
What does this mean?
I didn't understand it.
Now, company is going to make its all sales on cash basis.
Hmm.
That means all the units that are being sold are on cash basis.
Yeah.
Whatever they are selling, they are going to receive how much?
150.
150 per unit.
Hmm.
Now my company has received an order from a new customer who is outside the country,
Hmm.
and he wants the order is for 900 units to be supplied in June.
Huh.
So in June, instead of selling 1500 units, they're going to sell more 950 units.
Okay.
Okay. And this 950 units is to be supplied in June. And my customer is ready to pay how much for it?
With how 950 in the question, it's 900.
Okay, 900.
Oh, acha, I thought you were saying add karke.
900 units.
Yeah.
This customer is ready to pay me how much?
150, 156.
120, 156. Sorry.
Yeah.
This customer is ready to pay me 156 per unit.
Hmm.
And this is going to pay me in 6 monthly installments that will start from August.
Yeah.
Okay, so he's going to pay me how much? 900 into 156 is how much?
1 minute. I will.
140, 400.
Yeah.
This is going to pay me in 6 monthly installments.
Yeah.
So per month he is going to pay me 23, 400,
Hmm.
which is going to start from when? August.
August, sir.
From 23, 400 for 6 months, he is going to pay me the money in August.
Yeah.
Okay. But I need to give him the goods in which month?
Um,
I need to give him the goods in the month of June.
yeah.
And production I do which month?
In the month in which the goods are there, units are supplied.
In the same month.
Yeah.
Okay.
Hmm.
Okay. In the month of production only I do my purchases.
Hmm.
Okay. Calculate the change in the expected bank overdraft at the end of each month, at the end of each of the months. June, July, and August, if the order was accepted, assume that all extra production would take place in the month in which the units are supplied. So
Okay.
now, see, I am going to receive the money of my sales in the same month. These sales that I am doing, I'm going to receive money in the same month. Okay. But
Yeah.
I have some payments that I am going to make in the month of purchases. That means June, July, and August, right? I have
Yeah.
made a cash budget where I'm going to make payments for June.
Hmm.
I'm going to make payments for July.
Yeah.
So I am going to make these payments. And when I am making these payments, I'm making the payments through bank overdraft.
Hmm.
Now think properly and see, they are telling that I am going to make some extra production in June.
Okay.
My payment policy will still remain the same, 40% next month,
60%.
60% next to next month, but money I will receive in August.
Yeah.
So my bank overdraft would increase in the month of June and July.
Okay.
That means I have to make some extra payment in June and July.
Yeah.
Think over the question, think over the working, and then I will come back and I'll pause the video for your thinking. Explain me what is the question saying? What is happening?
So basically, you're supposed to, there's a customer who's giving 900 extra units per order. Okay. So from that, in the question, it says that the direct labor will be paid in the same month. Okay. The direct material will be paid in July, and there's, which is 30, this will be paid in July.
Customer is ordering 900 units
Yeah.
and he is going to pay us 156 per unit.
Yeah.
And this payment he is going to give us starting from
In,
August.
yeah.
Okay, and this is going to pay us in 6 monthly installments.
Yeah.
So the first inflow from the customer will come in the month of
August.
August. That would be 23,400.
Hmm.
Okay. But the goods are to be supplied to him in which month?
The
Goods are to be supplied to him in which month?
in June.
In June 2025. So if I am supplying goods to him in June 2025, that means I have to do my direct material, direct labor, and other cost expenses as usual.
Yeah.
Yeah. Direct labor is paid in the
Same month.
direct material will be paid
Will be paid 9.75 in
in
July
and
and August.
15 in August.
Yeah, 15 will that to 60% will be paid.
And other cost will be paid in the next month. That is, if I'm supplying him in June, so I have to give him other costs of how much? 36, right?
Yeah, it's 36.
36 will be paid in July.
Yeah.
Now, what is the question asking from us?
They want to know the change in bank overdraft.
They want to know the change in bank overdraft. That means whatever extra expenses we are doing, they want to know about it.
Yeah,
But the inflow will be received only in
August.
August. Okay. So, what will be the change in the bank overdraft?
So first though, we're supposed to do direct labor in the month of June,
Direct labor in the month of June. How much is my direct labor cost?
$30,
$30. And for how many units?
900.
900 units. So increase in overdraft at the end of month of June will be 27,000.
Yeah.
Okay, then
Then you have to do the direct materials for the month of July, which will be 900 into 9.75.
so it comes up to how much?
8,775.
900 into 9.75, and this calculation we've already done above.
Done in the previous one.
Yeah. Other cost will also go in the month of July.
Yeah, this will also be in July.
So how much will it be?
36 into 900.
So other cost will also be in the month of July. So it would be 36 into 900.
Hmm.
So it's coming up to how much?
32,400.
Okay. So overdraft increase at the end of July will be
68,175.
okay. So this includes the June overdraft and the July overdraft.
Yeah.
Now in August,
So in August, the direct materials, the rest 60% you have to pay. So you have to do 900 into 15, which we calculated in the upper ka part.
900 into 15. So it comes up to how much?
13,500.
And in August, you will also receive from the customer.
Yeah, you'll receive 23,400, the one fourth of the
Yeah. So
payment.
that will be subtract. So
Yeah,
what will be the increase in overdraft for August?
58,275.
We complete the C part. Now let's go to the D part. Advise the company whether they should accept the order or not.
Okay.
If you accept the order, there will be an increase in the overdraft.
Yeah.
But at the same time, there will be a good amount of profit.
Should I say advantage, disadvantage?
Just tell me whether you should accept the order or not. Give me the advantages first.
Okay, so it will be more profitability. Profitability would increase as the sales would be more. The spare capacity would be used, and the market share would be high, increasing market share. These are the advantages.
Hmm.
Disadvantages are that the workers may be overworked, the machinery could be exhausted, and there may not be enough capacity to store the extra 900 units. So conclusion we should take the order cause the customer can then in the future give repeated orders also.
Okay, very good.
Hmm.
Okay, so with this, we complete our 9706 May June 2024 paper 42, the source A.